Hi everyone, I hope you all safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy Chapter 3, Exercise Sum number 8. The heading is Pass the journal entries in the books of Sasi Kumar, who is dealing automobiles. Let's read the first transaction. 2017 October 1, commenced business with goods rupees 40,000 rupees. From now onwards, you have to see all the business transactions as an accountant point of your business view. Listen the transaction, commenced business with goods. So what is meant by commenced business? Commenced business with started business. With what? With goods. What is meant by goods? Who is the owner of the business? Sasi Kumar is the owner of the business. What he deals? He deals automobile business. So, commenced business with goods means started business with stock, automobile related stock. So, Sasi Kumar started business with automobile related stock, rupees 40,000 rupees. Are you understand? So, what are the accounts are involved here? Stock account and capital account. Why capital account? Who is the owner of the business? Sasi Kumar is the owner of the business. He started business with stock means capital. He invested capital in the name of automobile stock. So capital account, Sasi Kumar's capital account. So stock comes under asset account. If Sasi Kumar started business with stock account increases. If stock account increases, asset account increases. If asset account increases, we have to debit the asset account. So in journal entry we have to pause stock account data because stock comes under asset account. Asset account increases, stock increases, asset increases. We debited the stock account rupees 40,000 rupees. Stock account data 40,000 rupees. Who is the owner of the business? Sasi Kumar, owner of the business. He invested capital in the name of stock. Okay. So capital increases. If he brings stock, capital increases in his business. If capital increases, we have to credit the capital account. So in journal entry, we have to credit to Sasi Kumar's capital account 40,000 rupees. We credited Sasi Kumar's capital. What is the narration? Started business with goods. Let's read the next transaction. October 3, cash introduced in the business rupees 60,000. Listen, previous transaction, Sasi Kumar started business with stock rupees 40,000. On October 3, Sasi Kumar introduced cash rupees 60,000. Okay, so again he invested in the cash in the name of capital. What are the accounts are affected? Two accounts are affected, cash account and capital account. If he introduced cash account increases. Cash comes into his business, 60,000 rupees cash increases in his business. Cash comes in your business. If cash increases, cash comes under asset account. Asset account also increases. If asset account increases, we have to debit the asset account. So journal entry we have to pause cash account data because cash is increases. So cash account data how much rupees? 60,000 rupees. So Sasi Kumar is the owner of the business, introduced cash into his business in the name of capital. If capital increases, we have to credit the capital account. So journal entry we have to pause to Sasi Kumar's capital account 60,000 rupees. What is the narration? Capital introduced. Let's read another transaction. On October 4, purchased goods from Arul on credit rupees 70,000 rupees. Listen here, purchased goods, which means instead of purchased goods, we have to use the term purchases. Okay, what are the accounts are involved here? There are two accounts are involved here. What are the purchases accounts and Arul account. Because why Arul account? Purchases goods from Arul on credit. While Sasikumar purchasing goods from Arul, he hasn't paid any money immediately. While purchasing, he didn't pay any money immediately, but he promised to Arul he will pay later. So, Arul is our creditor. Who is the creditor? Arul is the creditor. Sasikumar is the liability. How much rupees? 72,000 rupees liability. So, liability increases. So, whenever you purchased any goods, your expenses increases. If your expenses increases, as per the rule of expenses, you have to debit the expenses account. So, in journal entry, you have to pass what you debited, you have to debit the purchases account. So, purchases account at all. Arul's, our liability increases. Sasikumar liability increases. If liability increases, we have to credit the liability account. So, in journal entry, we have to pass to Arul's account 70,000 rupees. What is the narration? Credit purchases. Then next read another transaction. October 6 returned goods to Arul rupees 10,000. What is meant by returned goods? We have to recall the previous transaction. What happened in previous transaction? Purchased goods from Arul on credit. So, purchased goods on October 4, purchased goods means here returned goods means purchases returned. What is meant by purchases returned? Purchases returned is nothing but the process of goods returned to your supplier, which you purchased previously. That is called purchases return. Can you say what is the other name of a purchases return? The other name of a purchases return is return outward, which means goods goes out from your business. Okay, that is called return outward, purchases return. So, come to the point. Here, October 6 returned goods to Arul rupees 10,000 rupees. What happened? On October 4, purchased goods from Arul on credit rupees 70,000 rupees. So, received 70,000 worth of goods from Arul. After delivered, you open the box, then only you come to know 10,000 worth of goods were damaged. So, you decided, you means Sasikumar, okay. You play here the owner of the business. So, you decided that you returned those goods, those damaged goods back to Arul. So, you returned those damaged goods to Arul. So, your purchases account decreases. How much? It is 10,000 worth of purchases account decreases. So, goods returned to Arul. What is the transaction? What is the journal entry? What are the accounts are affected here? Purchases account and Arul account. What is the journal entry? Journal entry is very simple. Because the rule of the purchases return is just opposite the purchases account. If purchases account have debited, purchases return account will have credited. So, as per the rule of the purchases return account, Arul account 10,000, Arul accounted for 10,000 rupees, per two purchases return account 10,000 rupees. What is the narration? Goods returned to Arul. Let's read another transaction. October 10, paid cash to Arul account 60,000 rupees. Before that, what are the accounts are involved here? Cash account and Arul's account. Before we pass the journal entry, we have small calculation. What is that? First Sasikumar credit purchases from Arul, how much rupees? 70,000 rupees. Then he returned back to Arul how much rupees? 10,000 worth of goods were returned. So purchases account decreases, right? 10,000 worth of goods were decreases. So we have to subtracted 10,000 rupees from 70,000. What we get? 60,000 rupees. Now on October 10, paid cash to Arul on account 60,000 rupees. Are you clear? Clear about it? Okay. If Arul's account is, Arul is our creditor. You are the liability of how much rupees? 60,000 worth of goods were your liability. Goods worth your liability. Okay. So if you pay to Arul, your liability decreases. You paid 60,000 worth of 60,000 rupees to Arul, your liability decreases. As per the rule of liability decreases, you have to debit the liability account. So Arul's account debtor, you debited in journal entry, you pass that Arul's account debtor 60,000 rupees because your liability decreases, because you paid 60,000 rupees to Arul. Your liability decreases. So as per the rule of liability decreases, you have to debit the liability account. So Arul's account debtor 60,000 rupees to cash account. You paid cash to Arul. You paid 60,000 cash to Arul means cash goes out from your business. Cash account decreases. Cash comes under asset account. If cash decreases, asset account also decreases. If asset account decreases, as per the rule of asset account decreases, we have to credit the asset account. So in journal entry, we have to credit the cash account. To cash account 60,000 rupees. Cash account credited. What is the narration? Cash paid. Let's read next transaction. On 15th October, sold goods to Chandar on credit is 30,000 rupees. Listen here, sold goods. Instead of sold goods, we use the term sales. Do you say what is the various names of selling person? The various names of the selling person is seller, supplier, vendor, drawee, creditor. Do you know the various names of the buyer? The various names of the buyer is called drawer, customer, debtor, acceptor. Okay, so come to the point. So sold goods to Chandar on credit rupees 30,000 rupees. So you sold goods to Chandar. You have cash sales or credit sales? Have you cash sales or credit sales? You have credit sales because here transaction given the transaction here clearly, sold goods to Chandar on credit. While he is selling goods to Chandar, Chandar didn't pay any money immediately. But he promised to you he will pay later. So Chandar's account, Chandar is our debtor. Debtor comes under asset account. If asset account increases, we have to debit the asset account. So as per the rule of asset account increases, because Chandar is our debtor, because Chandar didn't pay any money, we sold goods, 30,000 worth of goods we sold to Chandar. Chandar didn't pay any money, that is we called Chandar is our debtor. Okay, we sold goods on credit. Chandar is our debtor. So debtor account decreases. How much rupees? 30,000 worth of rupees increases. Debtor account increases. If debtor account increases, debtor comes under asset account. Asset account also increases. If asset account increases, we have to debit the asset account. We have to debit the Chandar account. because Chandar is the debtor. So in journal entry we have to pass Chandar account debtor 30,000 rupees. Then to sales account. Why sales account means if you generate sales in your business, your revenue increases, right? If your revenue increases, you have to credit the revenue account. As per the rule of revenue, if revenue increases in your business, you have to credit the revenue account. So in journal entry you have to pass two sales account with 30,000. What is the journal entry? What is the narration? Credit sales. What is the transaction? It tells us credit sales. Okay. Let's read another transaction. October 18, Chandar returned goods worth rupees 60,000. What is the previous transaction? Tells us sold goods to Chandar on credit. Here Chandar returned goods worth 6,000 rupees. So sales return. This transaction tells us what? Sales return. Before that, what is meant by sales return? Sales return is nothing but the process of returning goods to your customer. Can you say what is the other name of sales return? The other name of sales return is goods outward. Goods inward, which means goods comes into your business. Okay. So what are the accounts are affected here? There are two accounts are affected here. What are they? One Chandar account and another one is sales return account. What is the journal entry? Journal entry is very simple. How to pass the journal entry? Journal entry very simple. As per the rule of sales return, if sales return is just opposite to the sales account. Sales return is just directly opposite to the sales account. If sales account is credited, sales return account will have debited. Okay. So as per the rule of sales return, in journal entry we have to debit the sales return account. So we have to write sales return account debtor 6,000 rupees to Chandar account 6,000 rupees. What is the narration? Goods returned from Chandar. Let's read another transaction. On October 20, received cash from Chandar in full settlement rupees 23,000. Listen the transaction carefully. Full settlement means after discount you received the cash from Chandar. Okay, from your customer. So we have prepare a small calculation. We have to do small calculation. What is that? To find the discount. How much discount you allowed to Chandar. Before you receive the cash, you allowed some discount, cash discount to Chandar. So we have to find. So we have to do the small calculation. Before that, what are the accounts are affected here? There are three accounts are involved here. What are they? Cash account, discount account and Chandar account. Okay. So we have to do the calculation. We need previous two transaction also. Okay. What is the first transaction? Sold goods to Chandar on credit rupees 30,000. We take 30,000. Then Chandar returned goods worth rupees 6,000. We have to subtract 6,000 from 30,000. We will get 24,000. Now you received cash from Chandar in full settlement. How much rupees? 23,000. What is the difference between 24,000 and 23,000? 1,000 rupees differences between 24,000 and 23,000, right? So you have allowed cash discount allowed 10,000 rupees. Okay. So cash account, you received cash from Chandar. How much rupees? 23,000 rupees. You received cash from Chandar. So cash comes into your business. If cash comes to in your business, cash account increases. If cash account increases, asset account also increases because cash comes under asset account. If asset account increases, you have to debit the asset account. As per the rule of asset increases, you have to debit that asset account. So in journal entry, you have to pause that cash account debtor, how much rupees? 23,000 rupees. How much discount you allowed to Chandar? 1,000 rupees discount you allowed to Chandar. Okay. So discount comes under revenue account. Discount is a kind of revenue. If you allowed discount, your revenue account decreases. If you received discount, your revenue account increases. Here you allowed discount, you paid discount. Allowed means paid. You provided discount 1,000 rupees. You provided cash discount 1,000 rupees. So this is the kind of revenue. Your revenue decreases because you paid discount. Your revenue decreases. If your revenue decreases, you have to debit the discount account. As per the rule of revenue decreases, you have to debit the discount account. In journal entry, you have to write discount allowed account debtor 1,000 rupees. Then Chandar, you received cash from Chandar. Chandar is your debtor. Okay. So debtor account decreases. Chandar is your debtor. Now you received cash from your debtor. Your debtor account decreases. Debtor comes under asset account. So debtor account decreases. Asset account also decreases. If asset account decreases, you have to credit the asset account. You have to credit the debtor account. You have to credit the Chandar account. In journal entry, you have to pause to Chandar account 24,000. Okay. So listen here. In credit debit column, how much? There are two values in debit column. In this transaction, you can see two values are there. What are they? 23,000 and 1,000 rupees. Now you have to add both the amount. You will get how much rupees? 24,000 rupees. How much rupees in credit column have? 24,000 rupees. So debit and credit both are same value. 24,000 rupees, 24,000 rupees. Debit is always corresponding equal to the credit value. Okay, what is the narration? Received cash from Chandar. Let's read the another transaction. On October 25, paid salary through ECS rupees 2,000. Okay, what are the accounts are involved here? Salary account and ECS. ECS means bank. Why ECS means bank? Listen here carefully. ECS, NEFT, RTGS, CDM, net banking, name of the net banking called Phone Pay, Google Pay, name of the card called, what is that? Debit card, credit card, Google Pay, net bank. These and all are collectively comes under bank account. Okay. So ECS comes under bank account. You paid salary to your worker through bank. Okay, so what are the accounts are affected here? Two accounts are involved here. One is salary account and another one is bank account. If you paid salary to your worker, your cash decreases. Okay, if you paid anything in cash value or goods value to your worker or any your customer, any person, your cash value decreases. Here you paid salary. Paid salary means your cash decreases. How much rupees? 2,000 rupees decreases. If cash decreases, asset also decreases because cash comes under asset account. If asset account decreases, you have to debit the asset account. So in journal entry, you have to debit the salary account. Asset account means cash. Cash means salary. Okay, you paid salary in the name of cash. Your asset account decreases. Salary means expenses. If you pay anything, you purchase as goods or paid salary, whatever it is, these and all are called as expenses. If your expenses increases, if you pay salary, your expenses increases. If your expenses increases, you have to debit the expenses account. So in journal entry, you have to debit the expenses means salary account. So you have to pass the journal entry, salary account debtor 2000 rupees. Salary account debited, expenses account debited, because expenses account increases. Then only you debited the expenses, that means salary account. So salary account debtor 2000 rupees. You paid salary through bank, ECS. You paid salary through ECS means bank account. Okay, bank comes under asset account. If you paid salary through bank means your bank account decreases, because cash 2000 value of cash decreases. Through bank only you paid salary, your bank account decreases. Your bank account decreases means your asset account decreases. If your asset account decreases as per the rule of asset account, you have to credit the asset account. You have to credit the bank account, that means. Okay. So in journal entry you have to pass to bank account 2000 rupees. What is the narration? Paid salary through ECS or paid salary through bank. Then let's read the another transaction. October 30, Sahil took for personal use goods worth rupees 10,000. What are the accounts are affected? Two accounts are affected here. What are they? Drawings account and purchases account. Goods means what here? Purchases. Listen here carefully. Personal use means if you invested cash into your business, what is we call? We use the term capital. The owner invested, the owner introduced, the owner brings the cash, the owner introduced the cash, that means capital. We use the term what? Capital. If you took the cash, if you took the goods in the name personal use, so we use the personal use means use the term drawings. Okay. If you see the personal use in the transaction, what you use the term? Drawings. Okay. So drawings always comes in debtor column. Drawing is always debited. So drawings account debtor 10,000 rupees. How much goods you taken? If drawing debited, drawing comes in debtor, you have to credit the goods. Goods means purchases. Instead of goods, we have to use the term purchases. If we pass the journal entry, drawings in debtor, so to purchases account goes to creditor. Okay. So we credited the purchases account 10,000 rupees. So if you see the personal use, what term you have to use? You have to use drawings. Drawings always comes in debit. So we pass the journal entry, drawings account debtor. If drawings goes in debit column, we have to write two purchases in credit column. What is the narration? Goods taken away by proprietor for personal use. Thank you. Take care.